So if you're looking at this video right now, chances are I'm still overseas and I'm on my way back, I think. So let's hope that this video is enough for you guys, and I'll see you guys on the 19th. Anyway, today I kind of want to talk more about the market conditions. Well, today, I mean, like today's the 12th, and I'm making this video for like the 17th, I think. So this is not going to be exactly the best video in terms of the quality of content, in terms of time wise, because chances are this is not going to be accurately timed anyway. But like I do, but I still want to make a video about this market investment sort of arbitrage that we are actually having in this current market cycle. I do want to tell everyone that, I always try to advocate for safe investing. And at the same time, like I said before, I do think that the market is going to be a little bit dangerous if you don't know what you're doing. And if you're not invested in the market, start to educate yourself in investing in the market and start very, very soon, because a recession is coming very, very soon. So if you're not invested in the market, okay, start learning about what is important in the market, and you can invest very, very soon. Because when the recession hits, trust me on this is going to be the best time for you to really get into the market. So that aside, chances are if you're watching this video right now, you're already invested in the market. And like me, you've actually invested a lot in the market. You're going to be interested in crypto. You're going to be interested in the stocks market. You're going to be interested in inflation, in bonds, in commodities, and such. So if you're invested in the market, what do I actually want to tell you guys? My own personal opinion, I don't think that DCA investing is going to be the way forward anymore. I actually had a chat with one of my friends who's a financial advisor as well. And, we were talking about multiple catalysts about what's going to be happening in this market cycle. And even for myself, I'm thinking a lot about it as well. So I'm thinking, what is going to happen if various catalysts happen in the market? Right now, personally, I feel that we have to be very worried about the recession that's going to be upcoming. And for how recession actually works, recession is actually a lagging indicator. Okay, we will only know about it when we see the GDP results, which only happens in the next quarter. And when we see the next quarter for the GDP, we will realize that, we were already in recession in the previous quarter. And we are not sure how long recession will last. That's going to be one fear. Another fear is definitely about inflation. What if inflation do not go down? What if inflation is deciding to plateau at 8.3% or 8% or 7%, something ridiculous? What if inflation decides to plateau? That's the second concern. The third concern is about employment data. And because employment, again, is also a lagging indicator, because in this case, we want to see what happens during a recessionary trend. In a recessionary trend, I want to see who gets fired. Not just companies stop hiring, but actually firing. Okay? If firing becomes a very standard procedure for a lot of companies, that's when I become very, very worried. However, of course, companies like Uber, companies like Facebook, companies like Peloton, they are already saying that they are hiring, they are freezing hiring. Okay, they are not going to go out and strongly find new senior engineers. They're not going to find executives and such. They think that it's better for them to freeze hiring for now and try to just solve the eminent mistakes that is happening in the company on the inside. So that's the third fear of mine, employment. What if employment gets hit? What if unemployment goes to 6%? What if unemployment goes to 8%? That's going to be very, very concerning. Fourthly, of course, the geopolitical tension. But for geopolitical tension, I do think that, for example, for Ukraine and Russia, there's a very, very good chance that there is going to be an occupation, and that's going to be lasting for quite some time. But if you're talking about when oil prices will eventually want to come back down, things of that nature, of course, I do think that that would only be happening. Hopefully, that will only be happening in about 2 to 3 months' time. So we'll actually have to see how is that going to actually play out. So yeah, I do think that that's going to be some things that we have to actually look through as well. And then finally, we have to actually look at the Feds. I don't want the market to be so dependent on the Federal Reserve, but sadly we are, because interest rates is going to play a very, very important and integral role in bringing inflation down. Right now, the Federal Reserve refuses to go hard on the interest rates because they are worried that they are not going to get the soft landing that everyone is asking for. China, India, and I think there's another country that basically came out to say, UK came out to say that they are not expecting a soft landing for their own country by bringing inflation down. And when they are not expecting a soft landing, it simply means that it is most likely going to be forcing a recession or a pseudo recession, something that I've been talking about for the past 3 months. Okay, so I do think that what the Feds have to do, just hike up the rates 100 basis points and see what the economy does. If we force a recession out of that, sure, it's not a soft landing. We'll hit the Feds, but fine, sure, let's do that. Because if you do not forcefully bring down inflation, the constant fear of having inflation plateau will always be there. And of course, like I said before, I don't think that this is going to definitely be an inflation plateau, and we'll only know next month from the next CPI report if we suddenly see the core inflation down to 0.3% or 0.2%, or even better yet, deflationary data. Then that's great. And that simply means that we already brought everything downwards, and we are off. We are getting out of the plateau. That is, of course, the best case scenario. But if the next CPI we actually see 0.5% for the core inflationary data, then yes, I do believe that the Feds need to really put on the big boy pants, okay, and force a recession. Okay, the Feds. Okay, for people who do not understand what the Feds are supposed to do, they're supposed to ensure that inflation is of a reasonable rate, interest rates are of a reasonable rates, and employment, well, basically max employment. That's all to their role. Okay, they don't have to care about the markets, they don't have to care about bonds, they don't have to care about recession, they don't have to care about climate change. Okay, the Feds just need to care about those 3 things. And I do believe that increasing interest rates upwards to bring down inflation and then getting rid of the excess interest rates would be a quicker way of doing it. However, of course, I do understand that by them doing so, the Federal Reserve is going to be thrown eggs, spears, everything. People are gonna hate on Jerome Powell till the next life, for the next whole lifetime. Okay, because he basically forced a recession. And of course, that's also what happened with Paul Volcker. And that's what a lot of people are very, very worried about. Because back in Paul Volcker's era, inflation was going crazy at about 16%, and interest rate went all the way up to about 10%, just trying to bring it down. And I do think that before we even go towards the 16% inflation, hyperinflated trends, I do think that it's important for us to increase the interest rates. So yeah, this is basically 5 things that I think that needs to be answered before we actually take a step forward into, dollar cost averaging into your investments, or before you want to really buy the dip. Okay, for people who are constantly talking about buying the dip, okay, honestly speaking, I haven't used the term buy the dip in months. Okay, and the reason is clear: there's nothing for you to buy. Dips in general are in no shape or form lacking in supply. We always have dips. Just look at growth. Just look at tech. Just look at blue chips. Look at the indexes. Look at retail. All of them are dipping. Dips are not lacking in supply. Okay, so simple as that. I'm not going to tell people to buy the dip. Okay, you can buy the dip if you want to. If you really want to average out on your position, go for it. Go for it. But honestly speaking, I don't think that I will be doing any sort of dip buy because I am not seeing any form of inflection point upwards. And chances are we're going to be in pain. We're going to be in pain for the next 6 months, maybe. Recession is going to be hard. And from what I've understood, recession lasts, okay, for the 0809, recession lasted about 2 years. Okay, for dot-com bubble, it lasted about 1.5 years. For Black Monday, it lasted about, I think, about 8 months or so. So the most recent recession that we did have was caused by a pandemic back in 2020 of March. And that was basically recovered in about 2 months when everything just came back. Every country was printing money. We got so much froth in the market, so much free fake money in the market. And now everything basically is just being bad and it's being shown up to the public. So yeah, of course, investing in the market is never easy. Okay. Of course, I do try my best to explain as much as I can about the macroeconomics and the microeconomics of things in the market. Simply because I am very, very interested in this market to begin with. But investing as a whole is definitely going to be harder. Okay. So if you're really, really interested, and of course, like I said before, I'm an open book, and because right now I do not really hold a lot of viewers. If you're really interested in having a conversation with me about your investment, just hit me up on YouTube, hit me up on Instagram. My tags are all over the place. Okay, you can just find me. You can just hit me up and talk more about investment if you're interested. Okay, as long as I have time, I'm definitely going to talk more about investment because I really am interested in it. I got nothing to sell you. Okay, I got nothing to upsell you. Other than the links down below, if you want some free crypto, sadly, some free crypto below, some $10 using my Coinbase link, or $10 of Bitcoin using my Gemini link. And surprisingly, your $10 would be able to get you a lot more Bitcoin now. So hey, use my link down below. And of course, if you are also not investing yet, you can use a Tiger Brokers or Mumu Trading platform down below with my link. You can get some free stocks as well. And of course, you can just drop me a DM, tell me what stocks you get, and maybe we can have a little bit of a conversation of investing as well. But anyway, that's all I have for this video. And after you watch it, if you actually watch to the end of this video, chances are you are going to be seeing me in another 2 more days, most likely. Anyway, hope you guys stay safe investing, and I'll see you guys in the next one. Thank you so much for watching.